Hi, I'm Jessica Amir for the Finance News Network. Joining me from Antares Equities is X20 Model Portfolio Investment Manager John Guadagnuolo. John, welcome.
Thanks, Jessica. Hi.
So first up, technology and demographics are really changing spending trends in Australia. So maybe you can tell us why are these trends so critical?
So they're important because they tell us how things are likely to evolve into the future. Why are these trends happening and are they likely to continue? So two things that we think are really important are the role that technology's played in the way that consumers now can choose the products that they want. There's a lot more information available for consumers that gives them the ability to choose things that they actually want. The other thing, of course, is our population's demographics are changing. And that's a really important aspect, particularly with what the so-called baby boomer generation are now reaching a point where they might still be working or they've just retired. Their children have typically left home, so they've got lots of money and they can make different choices with how they spend that to what they used to do in the past.
And John, you've previously mentioned that these two key trends have really led to a massive rise in what's dubbed as the experiential economy. Maybe you can actually define the term for us.
The experiential economy is one that's people looking for experiences, be it travel. A really interesting thing that we've observed is the rise in spending of people in cafes and restaurants. If you go back 30 years ago, around 10% of people's money was spent on cafes and restaurants. It's now 14%. People like going out. You look at how strong a business like Bunnings is. Bunnings is not just a hardware store, it's all about what you do in your home, creating different environments for different things to enjoy and to experience, be with your family, be with your friends. So it's the rise of the experience over and above the consumer good.
And John, when selecting stocks for your portfolio, such as the Antares X20 Model Portfolio, why is it so vital to consider these key trends?
Well, the first thing is to work out what not to invest into, because as these trends continue to develop, the businesses that are losing share to these trends will continue to suffer. They won't be good investments. We don't want to invest in those. And the most obvious that springs to mind would be something like Myer. It's difficult to see its relevance to how people will experience things into the future. Its offer looks dated. There's other reasons as well. But then we need to know, okay, well, we do spend the money. Well, we want to spend the money where the trend is going. If we understand the drivers of the trend, then we understand how that trend can continue and persist. We need to invest along with that. So people are looking for experiences. What type of experiences? So we look at travel. Travel spending in Australia has been very strong for the past decade. We like to invest with that. So we've had shares in a company like Flight Centre from time to time. Likewise, we own shares in Qantas. This is a company that's a direct beneficiary of people wanting to travel because it's not travelling down to the coast and having the weekend, it's going overseas or it's going to some new experience that they haven't had before. That's what we're looking to invest alongside.
And John, how do you see the way we spend money really evolving over the coming years?
We've spoken about demographics and how that will change things, but another trend that we've observed is the impact of technology on the way that we spend money. In particular, if you look at the way that we spend money on everyday items, consumer goods, the share that's held by the higher margin branded goods has been falling, but the generic home label, as we used to call it, private label if you prefer, has been rising. And this is not just in Australia, the same trend is observable in most developed countries. In the United Kingdom, Aldi and Lidl, we don't have Lidl in Australia, but they're a very similar company to Aldi. They've gone to nearly 20% of UK grocery share. In Australia, we know Aldi's gone to 10. Why is this? Because people no longer want to pay a premium for consumer goods. Why? Once upon a time, you were reliant upon the consumer good company to tell you what was in their goods and why that you would have to pay a premium for them. But with the rise of the connected economy, in particular a mobile device, it's very easy to find out the relevant details of any new product and whether or not you're prepared to pay a premium for it. And generally, the answer is increasingly no. So people are not spending the money on the branded good, they're saving it. That's driving a shift into certain types of format, like Aldi, but in particular like Kmart. So we see the Wesfarmers owned Kmart doing very, very well because it's got a very well-defined offer around value and it's authentic. The one thing that you need to realise in a connected economy is that your offer must be authentic because any falsity that you put forward can be discovered instantly through a connected economy.
Last question, John. How does this provide opportunities for fund managers?
It provides a lot of opportunities for active fund managers, for stock pickers, because we can decide those businesses that we think are going to fail because they're not going to adapt to these trends. Their business model won't allow them to. At the same time, it allows us to pick the businesses that will actually profit from these trends. So once we understand the trends, we can apply those trends to businesses and we can work out whether businesses fail or succeed. It's a really good opportunity for active fund managers to add value to their clients' portfolio by avoiding those businesses, I should say, that have all the characteristics of failure in these trends, and meanwhile diverting that capital to those businesses that will benefit. So therefore buying businesses that are involved in travel, involved in leisure, that have very well defined offerings in terms of authenticity and value, whilst at the same time avoiding those that seem to be fake. That's a really big aspect that you need to have, because you need to understand a business can no longer pretend. It needs to be true.
Well, very insightful. John Guadagnuolo, thank you so much for the update.
Thank you, Jess.